Hi everyone, today let's talk about the potential for a lost decade. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So they say here lost decades happen more often than you think, and this is kind of the issue, right? So we do think that markets are a little bit expensive. On a historical basis, they definitely are, and this is where you want to get more into that 60-40 portfolio like I am right now. You want to continue to pull in those bond dividends or dividends on stocks, which have a more beneficial return in these kind of lost decade time periods, 10.2% since 1979. So overall, it's good. It can be a little bit of a laggard when you have global stocks doing amazing, which we have seen over the last couple of years. But at this point, I just feel like we're expensive, and I was overweight stocks for a while during that period. But like I've talked about on the channel, I've been a strong proponent of bonds. I think buying bonds in this area is probably a good idea. And it's not just the fact that you're buying bonds, you're getting those dividends and then acquiring more bonds, which builds that compounding effect, or you're buying more stocks and getting more dividends on a rolling basis. And over the next 45 years, I do think that's the better play from here. And you can see here they talk about lost decades. They've happened 6 times over the last 120 years. So about half of the time, that means we're getting sideways price action before we're getting to all-time highs. And each of those averaged around 11 years each. But like I said, you can still get really good returns on the dividends, acquiring more positions as they continue higher over the medium to long term. You can see all of those last decades here, 1900 to 1920, sideways action, from 1930 up into 1940s, sideways action, multiple time periods where this happens. You can continue to watch it. And then you can see 2000 into 2010 was our most recent lost decade, down 1.6% during that time period. But if you are maintaining dividends and continuing to dollar cost average, then you are still getting a better position over time once we get into that very strong period. But the thing that they're highlighting here is these start with very high valuations for stocks or bonds. Right now, bonds are not super expensive. They were for a while. And then if you've been paying attention to the markets, we've had that really big downturn. And what they're highlighting here is don't ignore the risk. I am positioned right now for more dividends, more cash flow type investments. Not all the way, but at least a little bit. I do think we're going to be relatively flat, if not bearish, over the next 10 years. Doesn't mean you can't go higher in the short term. You can see even during these periods, if you zoom in a little bit, you can see there are some peaks and valleys where you can have very strong runs or very bearish periods. And if you trade those well, you can still make money. Moving over to fear and greed, we stepped up to a 74 from a 73 a week ago. Markets were really choppy and mostly sideways. We did get a new all-time high here on momentum as price continued higher. And you can see here all of the major indicators at this point: extreme greed for strength, breadth, and momentum. You can see put call ratio into regular greed as that started to roll down a little bit. Market volatility, neutral. Still pretty elevated here at a 20, but this is really the only one. Extreme greed here on safe haven demand, greed on junk bond demand. Pretty much every metric at this point is saying that markets are a little bit extended to the upside. Moving over to the AAII survey, you can see we stepped up to a 49 from a 45, so markets got a little bit more bullish. Neutral actually expanded as well here, 27 to a 30, and the bears getting squeezed really, really low. We haven't seen a number in the 20s in a while. We're at a 20.6, so again, as a contrarian metric, this is just about as bullish as it gets. 49, 49, 50. Neutral's actually in line with historical averages, and then the bears way, way below. So again, I would call this greed or extreme greed based on the AAII survey. Moving over to seasonality, you can see seasonally this was supposed to be a downwards period. We didn't really end up getting that, especially the election year is supposed to be quite bearish. So far it's been more in line with the regular years. Even that was supposed to be a little bit bearish, about 0.25%, but really that's not what we've seen. We've kind of seen this more 10 to 16 period with slow grinding price action. We'll see if that continues. Otherwise, this week is supposed to be basically sideways choppy action. It starts at -2 or so and finishes right in that same range. For the regular weeks, you can see it is slightly bullish. We'll see if that plays out. Like I said, it does feel pretty extended. And then looking at the calendar here for the Monday, you do have the bond market closed for Columbus Day. Stocks have a little bit of trading on the Monday. And then for Tuesday, monthly expiration week, So we do have that third week options expiration up 13 of the last 16, so a relatively bullish period for the week. And then the 16th, Wednesday, supposed to be pretty bullish. We do have a fair amount of data here for the Thursday retail sales, Philly Fed survey, housing market index, and then that options expiration, as well as housing starts. Expiration day has been up 9 of the last 13, so relatively bullish. And we'll take a look at that a little bit closer here on Max Pain. Moving over to the earnings calendar, we did kick off earnings on the Friday. We still have some more of those financial names, Bank of America, Goldman Sachs, Progressive, Citigroup. Here for the Tuesday, there's really nothing on Monday. And then you have United Airlines, Walgreens Boots Alliance. Definitely want to see how they're doing. They've been quite terrible. And then for Wednesday, ASML, the biggest company there. Abbott Labs, fairly interesting. Morgan Stanley, again, finishing up those banks. Thursday gets pretty exciting here with Netflix, still a $300 billion company. That's going to be interesting. And then you got Blackstone, Snap-on Tools, Alaska Airlines. Continue to want to watch those travel agencies. Usually that's one of the first things to start slowing down if it's going to do it, and we haven't really seen that quite yet. And then looking at the Friday, we do have American Express, SLB, which is an oil company, and then P&G, one of those staples. See how they're doing. Moving over to Max Pain, looks like we got regular Max Pain working pretty well here today. So we got Max Pain at 561, current stock price 578. So again, way below current stock price. Usually that's a magnet for price, which would give you a $17 down move. I'm not sure that we're going to get all the way down there, but it would make sense to see this fall a little bit. Call walls here at 572 and 575. So that's about a 1% down move from current price. And then put walls don't really come in until about that 560 area, which is your Max Pain area. So 560 to 569 makes sense. We'll see if that continues to play. If we get another bullish finish, we're already at the top of the puts. So that again makes the risk to the downside. Total options is not super high for a third week options expiration. 2.79 million, almost 2.8. Put call ratio still pretty high at 3.27. And then looking at Max Pain for the Qs, you can see Max Pain price 475, current price 492. So it's even more bearish here on the Qs. Total options obviously less at 1.58, almost 1.6 million. But more interesting for me is the put call ratio being much lower at 1.54. To me, that says markets have a little bit more room to the downside. 485 makes sense, somewhere in here, 480, 485. Would expect it to get back below 490 into that range. So about 1 to 2% down move potential in my opinion. Moving over to the charts, looking at the S&Ps here on the weekly chart. This is the SPX. You can see we broke this trend line here. We've been above it before, so I added this trend line to here just to give us something to work with. Otherwise, this was the previous line I was watching. So you can see here that's up at 58.75. Again, slight bullish week would make sense right to that level. Could overthrow it, and then we got the big down move last time. So just off of it, if we did see that move, that would be about a 1% up move to there, and then it overthrew it a little bit, and then the next week we saw the big down move. Could be a little bit different where we get the initial touch and then get the move down. Otherwise, momentum and RSI still bullish here. And then looking at it here on the daily, you can see that same kind of price level, the breakout here, inside candle continuation, momentum RSI still look good there. And then looking at the SPY, I've been watching this rising wedge formation, momentum and RSI still good. We did close above it here on the weekly chart, just barely. You do have some levels to work with up here, but we're not really in range of those yet. I can go ahead and extend that out to see where it would be. That would give you a price target around $600, just short of it, $598. But really what I'm watching for is a fake out breakout style move where you get above this rising wedge, you get a kind of rejection, kind of in that same range that we just talked about on the SPX, a 1% up move, hit that level, and then you would get a pretty decent rejection off of there. And then I would expect it to actually push down into this zone here around 556. Again, I wouldn't expect all of that to happen within 1 week. Maybe you get the push up, get the retest within the week, and then we get the continuation breakdown in the following week, something like that. But right now, everything still looks pretty good. And in terms of levels, I'm still watching 574.71 as support. And of course, you have your trend support here at 578.77. And then looking at the Tasty charts here, you did hit that second ATR band that has been your resistance here in the short term. That is sitting at 580.05. That'll trend up slightly for next week, potentially up around 583 or so. If you can break out and push to the upper trend, kind of like that move that we were watching here above that trend line before, that would push you up into the 594 area. I don't know if we're going to see that kind of a move. We did see the continuation here on the weekly chart. So everything here still says that this is going to be bullish here in the next week. Still looking for that last final touch of those levels. And then looking at the daily chart here, again, second ATR band, 580.15. So pretty much in line with the weekly. Daily ATR trailing stops continue to trend up, and it did push up pretty dramatically there on the Friday session. Trailing stop is at 562.44. And then that upper level here is at 585.28, which is about a 1% up move, which again kind of fits with that 1% thesis for the week. Moving over to the NASDAQ here on the weekly chart, you can see we did get up to that 20,270 level. The trend is just above it, 20,360. For next week, that trend is going to be 20,519. Momentum bullish, RSI still bullish. Again, gives you a little bit of room for upside. If we did get that kind of a move, that's about 1 1/3, 1.5% or so. And then we'll see what happens from there. That also takes you pretty much to the all-time highs for the NASDAQ. If you get the breakout from there, there's a lot of room, around 5% or so. And then looking at it on the daily chart here, you can see that sideways consolidation for the last 3 days, looking for a push up to that trend, and then we'll see what happens from there. Last time we got a pretty decent rejection from top to bottom. That was about 3%, but you could also see some of these other moves, which were quite a bit bigger, 7 to 8%. If we did get a move like that, 7 to 8% lower, that would take you all the way down to the 144 EMA, which is all the way down at 18,986, probably in the 19,000 range for next week. And then looking at that NASDAQ chart a little bit closer, we've been watching this kind of bull trend here. We haven't been able to get back up to that upper trend. We did break the trend line here after the retest 2 weeks ago. So continuation last week. If we get the move higher, that's going to be all the way up at $512 or so. Momentum still bullish, RSI still bullish, while that SMA continues to trend down. So want to see this kind of flatten out and continue higher if this structure is going to continue to that next upper level. Again, that would take you to a new all-time high for the NASDAQ. Then looking at that daily chart here, you can see we're still stuck at the high from the 26th. Need to see it break out from that level. If it does, there's a fair amount of room here, in my opinion, up in the 3 to 3.5% range, maybe as high as 3 3/4 over the next couple of days. I don't think it's going to do that really, but nothing's impossible. You can see the breakout, kind of hesitation, and then a gap up and rally right to that trend. If it does that, it could be in play, a couple of percentage points within the week. So again, very critical week. If it breaks down back below the trend, that structure would give you about a 4% down move to this next level here, 3.5 to 4% or so. And then looking at the levels, 492 is the one we've been watching. We did close above it on the Friday. A little bit choppy here from the Wednesday into the Thursday, but your next level's all the way up at 500. Of course, the midline here is the gap fill. The close of that candle was 496.34. Moving over to the NASDAQ here, you can see that first ATR band is your resistance still. We've been grinding along that area for a couple of weeks now. We hit it all the way back here on 19 August week, again here on 23 September, and then again this week. That ATR band right now is at 492.31. It'll trend a little bit higher here, potentially into the 494, 495 area. Momentum stepped back to bullish here for the first time in a while. The volume weighted MACD has been fading, but it seems like this is ready to accelerate a little bit. Kind of looks very similar to this setup where we were kind of grinding sideways action for 2 weeks, and then you got the big spike, sideways action, one more big spike. So if we get the continuation this week, upper ATR band would be around 511, 512 for next week up in here. And you can see all the ATR bands are still grinding up and to the right. So the weekly chart still showing bullishness. And that step towards bullish momentum is actually pretty interesting there, like I mentioned. And then looking at that daily chart, lower ATR bands continuing to grind higher. ATR trailing stop also stepping up on the Friday session. That is now at 472.90. Next ATR band is your price target, 496.49. So that's about a 0.5% higher. If it can break from there, your next ATR band is all the way up at 502.82. Not sure we're going to get there within the next day or two, but it could be maybe like an end of the week price action. Remember, Max Pain could carry a lot more weight this week, so maybe we touch it midweek and then pull back. Something more like this, gap up, touch the area, and then pull back to the mid-range. So something to consider. And then daily chart MACD continuing to roll down here on the Tasty charts. Moving over to the Russell here on the weekly chart. The week itself was actually not super great. It was actually up only 0.96, momentum flat, RSI flat, but the last day of the week really saved it. So we threw 2 pins to support, held that support 2 times, and now we're testing 221.49. Critical zone here, looking for the trend test within the next week at 223.40. This still looks very good to me. Want to see that breakout. If it goes, we're definitely going to push up to this trend here, in my opinion. You can see test, break, continuation, test. and then we'd rejected pretty hard from that level. So if we can get the breaks here in this zone, that would give you a potential of about 4.5%. And then just behind that, I have 232.08. So looking for a pretty good push here on the Russell. I still like this setup, and I think it's going to swing and accelerate. And then looking at it on the daily chart, like I was talking about, you can see this kind of fading action, held support in here, broke that 218.13 level right to the 221.49 level. I think this is going to go momentum, going to step to bullish here Monday, Tuesday, and then an RSI breaking out here. I think this is going to push pretty strong over the next couple days. Could get one of those acceleration style moves, which can be pretty aggressive here on the Russell. Again, trend resistance around 223.50. I think it's going to go. Moving over to the Russell here on the Tasty charts, you can see that first ATR band is resistance on the weekly 220.90. We finished just barely above it. So based on that, a push to the next ATR is possible at 230.13. Again, that's in line with what we were hoping for around that 232 area. If that breaks, the upper ATR band is what we touched after that, which is all the way up around 239.36. I don't think we're going to get there within the week. I mean, anything is possible. We did see it here with a big push right to it, and then we kind of pulled back after the touch, continuation, retouch, and then breakdown. So certainly possible. ATR trailing stop hasn't moved on the weekly. ATR bands continuing to trend up slowly. Volume weighted MACD not moving a whole lot on the weekly chart. And then looking at the daily here, you can see those ATR bands trending up. ATR trailing stop stepped up to 209.39. Momentum also stepping towards bullish on the volume weighted MACD. Everything here says that this should continue higher and get a kind of swing move like this. Second ATR band is what I would look for. That's at 226.16. Again, that's about $5 higher, or about 2.5%. Moving over to the Dow, you can see we hit the trend line almost to the penny here on the closing basis. If we reject from there, your support is still 426.20. If it breaks out from here, we can look for a push up to this next trend here around 435. Otherwise, if it continues to ride this trend, which seems more likely, that's going to be at 431.06, which gives you about $3 of upside, or about 0.75%. And then looking at the equal weighted S&Ps, just could not break that all-time high level at 179.94, closed at 179.90, missed the close by 4 pennies. Momentum and RSI say this is still bullish, and to be fair, the high of the week was 180.14, so we did overthrow it by a little bit, but then we closed below it. So looking to see if we can get the candle break continuation up to the trend here. That would be up around 180.95, 181, somewhere in there. And then if we did get the break, from that level, your next trend would be about 1.6% higher over the next week or two. Moving over to the ratios, SPX divided by the Russell did throw a huge wick, almost hit the level at 266, but ended up finishing basically unchanged, 0.13 to the upside, still in the same trading range it's been in. Momentum swinging to bullish, RSI swinging to bullish, so SPY should outperform. I do think that that's going to flip here. I think the Russell's going to outperform. That's what fits with the technicals right now. And then looking at the NASDAQ SPY, continuing to throw wicks and hold this 9 EMA at 348. Momentum swinging to bullish, RSI just barely above the SMA, but that is still trending down. So a little bit more concerning here if this does reject off that 55 EMA at 3.51. That's going to be quite bearish. Overall, we could get the continuation, just watching those key levels of resistance. Moving over to the SPY divided by the M2 money supply, we did get the breakout of that level. 27.25 was the level. We'd been at it for 3 weeks. We got the clean break here. So above that is 28.5 above the current price. That would give you about a 3.5% up move to the next resistance. So we'll see if that happens. Again, don't forget, this is very extended territory. You don't get here and stay here. This is nearly to the top of that .com bubble in terms of price action, in terms of the stock market extension. And just to give this some historical context, you can see it's been as low as a 5.6 back in the 1980s, and then we rallied back up. The mid-range is around a 14 or so, peak range around 21. Very, very extended here, and now we are very extended once again at the current price. Doesn't mean that it's going to flip at all in the short term. Everything continues to look bullish. Just understand that this will come down at some point, in my opinion. Moving over to the Mag 7, the Mag 7 was actually bearish on the week, about 1.5%, so market leaders not really leading markets higher despite them actually continuing higher on the SPY. Makes sense since the equal weights are continuing to all-time highs, but like I said, Mag 7 rejecting off that key level, 283.46. We've been there for about 3 weeks. We're pulling back to support at 273.41. We'll see if that level holds. Could pull back to the 9 EMA, maybe 269.80. We'll see how that level holds. If not, momentum is rolling to bearish, RSI is rolling to bearish, and then your next level here would be 265.08, which is right on top of VWAP and the 21 EMA. At this point, this looks like a high, lower high. If we get the continuation, that's not going to be great. And usually these do carry markets right now. They are a huge percentage of the NASDAQ and the SPY. Equal weights could hold in there, but I don't see the SPY or the NASDAQ going too much higher if the top 7 stocks are not participating in that move. Moving over to Apple and Microsoft. Apple was up 0.33, really back into the middle of this range after testing support. Momentum bearish, RSI bearish. I still think this is kind of rolling. It's just waiting for these EMAs to consolidate. 21 needs to continue to trend up here into the 224 area. And then once that structure breaks, I think we'll see a bigger move down. Probably down into the 207s, 208s to hit this trend line here, which in a couple weeks from now could be in the 211 area, 211.55, right at that level, somewhere in there. So Apple not exactly accelerating to the upside, at least in the short term. And then looking at Microsoft, we've been watching this as a bearish structure. You can see it pretty clearly. Waiting to see if this kind of downtrend confirms. Right now you do have a high, lower high, big sell-off. Waiting to see this hit that midpoint, which is sitting down around my level, 394.22. Still at critical support at 413.36. Once that breaks down, I think we're going to push right to the 55 EMA down around 402.56, which again gives you about $11 of downside, very close to a 3% down move. Momentum bearish, RSI bearish. I still think this is a matter of time before we start to see this roll over more aggressively, similar to what we saw here. Moving over to Tesla and NVIDIA. Tesla had a terrible week off the back of their Tesla day, 12.9% down, almost hit my level here at 214. That's your current support. Did touch the 21 EMA at 215.16. This is the zone where it's going to hold, in my opinion. If it does not hold this zone above that 55 EMA at 209.69, then I think this is going to trend down much more aggressively. Let's go ahead and extend out this trend line, see maybe if we're going to get a retest of that. Maybe somewhere in there. The trend would be all the way down at 185, so that would be catastrophic if we did see that. But this is a clear double top now, right at that same level that we talked about, 264.68. And based off this kind of a candle, even if you did get a retracement, I would expect it to get sold and see more downside. Momentum bearish, RSI bearish. NVIDIA, on the other hand, swinging back to bullish, breaking above the SMA, still looking for the touch of that all-time high, up at 140.76. Strong candle, 7.9%, and I think there's more in this. Moving over to Amazon and Alphabet, you can see the trend for Amazon is still up here at 192.37. Seems like we're probably going to get a touch of that level. We broke 188.61 right at the end of the week. Momentum stepping to bullish, RSI stepping to bullish. So we were looking for a potential bearish setup at that level. I think it was just a little bit lower in here around the 186 area at the 21 EMA on the daily. Didn't do it. Broke the level. So looking for a little bit more continuation. And then I do expect it to reject from there like it did here. So we'll see how that plays. It did hold a much higher low, so that's interesting, holding this trend in here. If it breaks out, potentially push back up to this most recent high around 200.5. Overall, looks okay, not super great. And then looking at Google, big down week, 2.4%, still holding the trend. This has been a very important level. You can see how many times we've been touching it since all the way back here in April of this year, broke through. That was a big continuation level. Once it broke cleanly, pulled right back to the level, consolidated, then broke again, pushed right to it, consolidated, and then continued again here. Actually a very similar setup to the one we were talking about on Amazon, but this is the weekly chart. So that 21 EMA is your resistance. Didn't quite touch it 2 weeks ago, and then this week again rejecting from it. 21 EMA, your resistance here at 171.41. If this continues lower, should see a test of that 55 EMA down in the 155s, 27 area. Momentum flattening out. Still trending to bullish, but flattening out. And look at this RSI, very clean retest rejection. That looks very bearish to me. Again, want to see it break the trend at 164.78, level 161. And then if these zones break, like I said, 55 EMA I think is in play. That's about 5.5% lower. Moving over to staples and discretionaries, these continue to kind of pull back in time, kind of a bull flag type setup. But right now, staples slightly positive on the week, 0.21. Discretionaries not so much, down 0.8. Still very much an uptrend on both of these, but momentum swinging back to bearish on both of them. So in terms of risk on, risk off, it seems like we're still in a little bit of a risk on environment. Only 2 weeks of bearishness, slight pullback this week versus staples, which hit that all-time high and have pulled back fairly dramatically from there. It's about 4.5% top to bottom, 21 EMA still hanging out in there around the 79.90 area. I think this has a little bit more in it to the downside. Momentum sure says that it does. So to me, still looks a little bit risk on as discretionaries continue to hold up a little better than staples, at least over the last 4 weeks or so. Moving over to oil and gas and technology. We've been watching these for a couple of days here. Oil and gas actually was negative on the week, 0.06. Threw a big wick down to the 135 area, got into that position, and then rode that back up to the doji. Want to see it get back above 140.88. I do think it's going to hold in here, and I do think it's going to continue higher, but this is a critical zone. You can see it's the high from 26 August week. Momentum swinging to bullish, RSI swinging to bullish. I think oil and gas has a little bit more in it. 145.92 at least, if not up to the trend, somewhere in here around 148.20, 148.30, somewhere in here. That does mark the highs back here to mid-July as well. And then looking at technology, similar thesis, low, you could argue higher low or double bottom, however you want to look at this candle. It's kind of a weird one with a huge body, gapped down a lot, and then retraced all of it to finish just positive on the week, barely. In terms of structure though, either way, it is a bullish structure holding that level, pushed right to this trend, hovered at it for 3 weeks, got the breakout this week. So that's a break of the midpoint. Based on that, you should see a push back up to this trend here around 6%. Technology still looking pretty good. Interesting to see technology looking good with the Mag 7 not looking as great. Moving over to wood and gold, you can see wood's in this kind of bull flag type setup, stepping to bullish here on the daily. Just wanted to show that structure. It does look like a clean bull flag so far with that first step. Did touch the low, gapped up and rallied into the Friday. I think if we get the breakout here, I think there's some more in it. If it rejects off this zone here around the 84.60 area, that's going to be quite bearish. I do want to see this continue higher. It was bearish on the week, and look at that volume, huge volume, 281,000, way more than the previous 80,000, and much more than that 2 weeks ago around the 40,000 area. So huge volume. Interesting to see that coming through on wood. I wonder if there's some kind of news event behind it, or if it's inflationary, something like that. But on the daily chart, it still looks okay. And then looking at gold on the weekly, positive week, 0.19 after pulling back pretty decently. Momentum still fading here. RSI still super overbought. So sideways consolidation. We'll see if it can hold in here. Realistically, it's probably going to roll down a little bit more and then get the continuation. Either way, still looking very bullish on gold. Moving over to 20 and 50-day breadth. Both of these managed to stay positive just barely. 2.31 and 1.08. Momentum still fading on both of them, continuing to roll to bearish. Both of them are below the SMA here now. 50-day still trending higher, but below the SMA in the short term. We'll see if this starts to roll or not. Really, the 20-day has already gone. It did have a much lower low. The low of the week was 43.62. The low of the previous week was 50.59, pretty much at the level. So both of these should continue to roll. They're taking their sweet time. But the other piece here is that breadth is staying basically flat while markets are continuing higher. Arguably, they're moving a little bit lower in the short term. So markets rallying while breadth fades. Moving over to 200-day breadth, this has been very flat for a long time. We've been in this range since December of last year, and we are still here in October. So basically 43 weeks or so in this same price range. We'll see how it plays. It's still just barely above 76.04. Not making any new highs, not making any new lows. Momentum fading, RSI kind of swinging to bullish a little bit. Interesting to see it kind of holding support here. After a bit of a breakout, it was downtrending for a bit, and then you can see this choppy action, held the higher low on the retest of the level. So maybe that's a bullish indicator. We can start to see this swing up with markets. And then we'll see what happens from there. If it continues up to these previous highs of the consolidation, up around 82, 83, and then the high is that 92.42, looking for that, looking for a test of it, and then we'll see what happens. So right now it's still holding in there, holding that higher low. It does look okay going into the next 2 to 3 weeks. Moving over to the dollar here on the weekly chart, you can see it pushed up 0.42, hit the level here, 102.98, hit the trend as well, just short of it. You could call it a touch. But the dollar gaining momentum, gaining strength. If it breaks from here, I think we're going to push to the trend up here. That would be a very powerful move. That would give you a move of around 2.25%. If we got a move like that on the dollar, that is typically a very bearish period. We've seen moves like that right here. Very strong move. That was a 7% move. That was not a great time for markets, but as it comes back and falls, that is a bullish period for equities. You can see October of 23, that was a very strong low level in markets, held that consolidation in equities, and then rallied super aggressively from there into this zone. And you can see how the dollar was moving lower while equities were moving higher during that period. So if this continues and kind of gains some strength into here, that's going to be quite bearish for equities. But if it rejects from here and pulls back into this zone, maybe they find a little bit more strength. So watching the dollar closely, it's definitely in a move. Moving over to bonds, JNK, very little change, 16 cents down, did touch the level, needs to hold that. Momentum fading, RSI fading, so it probably has a little bit more pullback in it. Could take a little bit, maybe this is a dip low, get a double top, and then a little bit bigger break. I would be patient here. Still a very bullish structure. And then looking at TLT, a little bit different here. 4 weeks in a row of bearishness, almost at that 55 EMA. Need it to hold that if it's going to do it at 93.22. My level 92.82. So strong zone here, highly traded zone. Want to see it hold this and then push back up into that 102 area. I still think it's going to do it. You could argue maybe a double top here, but this is still a low, higher low. I'm expecting one more higher low in this same zone and then get that continuation higher back into the 102, 103 area. Moving over to volatility, positive on the week, 6.5%. Again, volatility rising while equities are rising. Hit this trend here, found rejection from there, still holding above the 20 level. I think this is going to continue up, hit that 22 again. That has been the most recent high a couple of times. You can see obviously the massive wick, which got all the way up into the 60s. You don't see that super often, but right now, still holding higher lows, momentum bullish, RSI bullish. I think there's a little bit more in it. We'll see how it plays. A lot of equities still look pretty strong, but volatility has been going higher. Breadth is going lower while equities are going higher. So market's doing some weird things over the last couple days. We'll see if this has any more strength in it. And based on this structure, I still think that it does. Moving over to my accounts, I made about $1,000 on the week, which is good. That's usually what I try to do unless markets move really aggressively one way or the other. In this case, they were grinding positive, so that's good for me, about $1,000. On the Russell, again, super bullish position, 220 for that Monday session for $1.45. So that gives me a little bit more room to the upside. You can see it's in a slight positive position right now. Gives me about 45 more cents or so. And then looking at the Qs, 486 for the Monday session, can continue to roll this up and out if I need to. Again, it still looks pretty bullish, but so far it's been hesitant over the last 3 days. So I've been able to sit on this position and kind of collect credit on it. We'll see how it plays on the Monday. If it pulls back, I have tons of protection. If it continues to rally, since I have that Monday expiration on both of these, I can continue to roll out into the Tuesday, Wednesday if I need to. Overall, marginally bullish, but being patient at these current levels, waiting to see if we get clear moves. Let me know down in the comment section if you think we're going to have another last decade. It seems like stocks are very expensive. Could this be the start of it? Markets are still grinding slowly higher, but it just seems like it's really choppy price action. The Nasdaq's definitely not going higher quite yet. But let me know what you think. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.